Hey everyone, and welcome back. In today's video, I'm going to be sharing with you the 5 investing resources and tools that you must be using if you want to speed up and have more efficiency in your investment research when fundamentally analyzing companies. I am affiliated with a couple of the tools that I'm going to talk about today, and the reason for that is because when I find a tool that I've found really useful, I generally reach out to the company and try and get a better deal for my audience. So I've done that with a couple of these tools, but regardless, each of these 5 has it's either completely free or there is a free version available that is also great. So you don't have to pay any money to use any of these 5. You can go out and grab all of these 5 and start using them in your investment process. Also, if you're wondering where I've been, I haven't posted in almost 2 weeks. I'm gonna be honest, over the past couple of weeks, there was 3 or 4 pretty major personal things that happened, and the combination of those things really just took the life out of me, and I needed to take a little bit of a break. So that's where I've been over the past 10 or 11 days, but I'm back and I've got a lot of great ideas for videos that I want to put out over the next few weeks. So if you want to make sure you stay updated with that content, then hit that subscribe button, and you can hit the notification bell if you want to be actually notified when I post new content. But with that said, let's jump into today's video. The first tool that I want to talk about today is TIKR. Now, TIKR is essentially a comprehensive tool that you can use if you're fundamentally analyzing businesses or stocks. And TIKR is probably the most comprehensive version of this kind of service that I've found, especially given they have a free version which gives you access to almost everything available on their site. I used to use QuickFS for a lot of the fundamental initial research. QuickFS is also great. You can get up to 20 years of financial statements, so you can have a quick look at the financial statements and see how revenue and cash flow is growing over time and look at the debt ratios. But I recently, over the past year or so, have been transitioning into using TIKR because it is just much more comprehensive. You get full global data on all major markets. So whether you're looking at the UK markets or the US markets or the Australian market, whatever market it is, the data will very likely be there. And they have data going back for 15 years that can be viewed in a table form, just as financial statements, or can be viewed as charting. And this is really important. Having 15 years to go back over is critical. I know a lot of people go back and look over 5 years. Even 10 years really isn't enough right now, because if you're looking back over the past 10 years and the business you're looking at wasn't really that badly affected by the pandemic, then you're just looking at a 10-year period of improving economic conditions. You're not looking at how the business performed during tough economic conditions. So looking over 15 years, particularly now, is critical so that we can see how the business performed before the global financial crisis, during the global financial crisis, and how long it took them to recover out of that. As I mentioned, they have great charting, which is really good for doing an initial look at some of the key areas that are important. So looking at how revenue is growing over time, earnings per share, equity, and free cash flow. Those are the 4 key areas we look at, particularly when we're assessing whether a business may have a competitive advantage. And just having a quick look using charting is a really good way to get a gauge of whether it's worth doing a deeper dive on that company. And this isn't where TIKR ends as well. There are a ton of other features in terms of looking at stock ownership and insider trading, tracking guru portfolios, and there's even a really, really good stock screener where you can actually screen for a lot of important fundamental things like debt ratios and growing cash flows over time, things that actually matter to a fundamental analyst like us, or a researcher. So that is also something that's available, really, really valuable, and I would highly recommend. And then once I've taken a look at a company in TIKR and I see that it meets some of the fundamental things we're looking for in terms of growing numbers over time and low debt ratios and that sort of thing, it will be then that I will grab 10 years or 15 years of financial data, and I will pull that into our second resource for today, which is actually my resource, my stock analysis spreadsheet. The stock analysis spreadsheet is something that I created a while ago and have been adapting and improving and adding features over time. It's a free download available on my website, so this one's just completely free. And it's basically the hub or the foundation that I use when I'm doing a deep analysis on a company. It's the place I put all of the raw data, and then I can take a look at growth rates over time. I can look at management's efficiency with the assessing return on invested capital. I can look at the debt ratios. And then of course, at the end of analyzing the business, I can start to figure out what the business might be worth And within the spreadsheet, there is a valuation calculator. It does a present value of discounted cash flows to estimate what the value of a business may be based on how I think those cash flows or profits for the business will grow into the future. In order to download the spreadsheet, you will need to put an email address that actually works, because I send you the link to download the spreadsheet in your email. But if you're worried about getting marketing emails or anything, which is what I actually do with my list, I send out notifications for videos and deals on my platform that's also available from time to time, not very often, but occasionally. If you don't want to receive those, as soon as you get the link to download the spreadsheet, there is an option at the bottom of the email to unsubscribe immediately. So if you want to get the spreadsheet, but you just don't want to put a real email in, put your real email in and then just unsubscribe, and then I can't send you any emails. Number 3 on today's list is an interesting one. It's not a particular service or anything like that. It's actually the Berkshire Hathaway annual letters. And you might be thinking, what is this, Hamish? This isn't a real resource. Well, it actually is, and I think it's probably the most important resource that I came across a while back before I started investing, or while I was getting started in investing, because there is so much value in these letters. For those who are not aware, Warren Buffett, through his company Berkshire Hathaway, every single year he wrote an annual shareholder letter, which is what every CEO or the chairman of every company does. But in these letters, going back to 1965, I believe, Warren Buffett has used this as not only an opportunity to talk about the performance of the business in the year, but also to explain his investment process and actually provide a little bit of value for people who want to invest using similar principles. And these letters are an absolute gold mine. There's information in these letters about what types of businesses you should look to invest in, how to identify the strong ones that have deep competitive advantages, how to assess management and decide whether the management team is doing things in the best interest of shareholders. Also, of course, how to figure out what is an appropriate price to pay for a business. All of these things are covered with case studies for some of the investments that Warren Buffett has made in Berkshire Hathaway over time. Incredibly valuable. If you want to, the best thing I think you can do is just go through one by one like I did and read every single letter. Of course, you don't have to read all of it. There's some parts that are just about the performance of Berkshire's businesses, but certainly trying to go through each year and read everything he says about how you should invest when following his principles. But I know that's not for everyone. Not everyone wants to sit down and just read page after page of that. So there's actually a couple of books that summarize some important segments from those letters as well. One that I've read is the Essays of Warren Buffett, which takes some of the most important parts about his investing lessons and categorizes them into, management and valuation and that sort of thing. So Essays of Warren Buffett, highly recommend. That's also, I guess that's another bonus resource that you can check out. And I've actually got another bonus while we're on annual letters, another set of annual letters that I highly, highly recommend you check out is Nick Sleep's letters that he wrote while he was running the Nomad, The Nomad Investment Partnership. Those letters, again, very similar to Warren Buffett, except this is an investment firm or an investment fund. Very similar to Warren Buffett's letters, Nick Sleep would write huge details about his investment style. And actually going beyond Warren Buffett, he goes into the nitty-gritty of basically sharing his deep analysis on the companies that he invests in. He does a case study on Costco, on Amazon, because his investment style was to look for these businesses that had a scale economy shared competitive advantage, so businesses that deliver as much of the value back into the customer in lower prices and better customer experience. There's a ton to learn in those letters, maybe even more than in the Berkshire letters. I reckon they're both extremely valuable. Buffett's because you get the high level principles and a good understanding of the strategy. And then if you read Nick Sleep's letters, you'll see how he's actually applying it to real businesses. Number 4 on today's list is Sharesight, which is of course a portfolio tracking software. So this kind of moves out of the realm of researching companies and more into keeping track of your portfolio, because most people invest in businesses through multiple brokerage accounts. And if you just leave money in different accounts, then there is no way that you know what is your actual overall return in the portfolio, especially because the rate of return that you see in your broker is usually highly inaccurate. Usually it doesn't include dividends. Usually it won't include the fees associated with those investments. It might just be a total return instead of a per year compounded return. And it almost certainly does not include when you trade in and out of stocks, including those returns in your total. So using something like Sharesight to bring all of your trades into one central place is absolutely critical. And beyond just tracking the performance of your portfolio and looking at the diversity of the different assets in your portfolio, it's also amazing for when it comes to tax time. So I sound like I'm doing a promo here, but it really is so good at tax time. I never have to worry about going and finding all of the different dividend payments that I've received and all of that and doing calculations. Sharesight does it all for you. Brings in all of the dividends and dividend reinvestments automatically. All you have to do is click at the top, go to reports, and click and download the capital gains tax report and download the dividend income report or taxable income report. And then you can just either do your tax pretty easily using them, or you can hand them off to your accountant and save him a bunch of time. And then number 5 on today's list, even though we're up to, I think, number 6 or 7 at this point, this one's actually 2 different websites. So we're gonna add another couple of resources here. And these are 2 websites, Whale Wisdom and Dataroma, that I use in order to track trades from big investors. Both use the 13F SEC filings from the US in order to track investment firms or companies that have assets under management of over $100 million. And both of them have kind of pros and cons, so that's why I like to use both. Dataroma has a more curated list of guru investors, and it's really good because it also gives a tally of which stocks are held by the most guru investors, which ones represent the highest percentage in their portfolio, so you can kind of see which are the top stocks per quarter or per year that big investors are putting money into or taking money out of. But as a con for Dataroma, it doesn't show any options contracts, and for some guru investors, the majority of their portfolio might be stock option contracts. So that's why I use Whale Wisdom, which does track these contracts. So for example, someone like Michael Burry, over the past couple of years, most of the time his portfolio has mostly been made up of put options and call options. So you would have completely missed those if you were using something like Dataroma. You would have only seen a very small fraction of his portfolio. But that's all for today's video. There's links to everything that I mentioned in this video down in the description below. If I have an affiliate link with a deal for you, it'll be down there in the description, so you can go check that out if you want. But as I said, there's a free version that's great for all of these, including Sharesight, including TIKR. All of these have a free version. So even if you don't want to pay, go check out the free version and make the most of it. I'd love to hear your thoughts on what resources and tools you guys use that I didn't mention in today's video. Let me know down in the comment section. I'll be answering comments and questions as this video goes live. Leave a like on the video if you enjoyed, and I hope you guys have a great day. I'll see you in the next video.